This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping the show on April 11th, 2014. Our time is 8:47 in the morning Mountain. Radio show runs on your favorite radio stations. Also, the show is archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. You can stream them there anytime you want. As well, we have a podcast through iTunes. Type in World Financial Report on Radio. Subscribe to the podcast. Listen to it at your leisure on your portable device. We go anywhere you do. Harold does daily market commentary on his website. You can also find it on the podcast site as well. Should mention before we get into the show that Worldwide Precious Metals, and this is the company Harold recommends you use when it comes to investing in gold, silver, platinum, palladium. Their website is www.pmc.com. Their telephone number 1-866-623-2002. They are going to be in Calgary the first week of May conducting free information sessions about investing in precious metals, the physical precious metals market. If you are in Calgary and would like to sit down for a free information session, all you need to do, and these appointments will go very, very quickly. They always book up very quickly. Connect with Worldwide, www.pmc.com, 1-866-623-2002, 1-866-623-2002, the website, www.pmc.com. One of the big stories on Thursday, the NASDAQ took a major hit. It was down 3%. Harold will give us a market update and commentary here shortly. The stock markets are down quite strong this morning as we are taping as well. Strong concerns about a major pullback coming. In fact, Mark Faber, he was interviewed by CNBC, and he came out and he said that he really believes that we could have a 2014 crash that will be worse than the 1987 crash. He said the stock market is setting up for a decline more painful than the sudden crash of 87. I think it's very likely that we're seeing in the next 12 months an 87 type of crash. And he went on to say that he suspects it could be even worse than the 87 crash. It's been a long time since there has been a pullback in the stock market, and there are some major concerns there right now. One of the top quotes we have from the newsletter, and you can get our free weekly newsletter from Worldwide, www.pmc.com, 1-866-623-2002. Get your name on the list for our free weekly newsletter. You can go through it in minutes, or you can spend hours if you want. Rick Rule saying, there's an old saying that everyone is familiar with, buy low and sell high. This is the time to buy low. This is something that the more sophisticated investors need to stop thinking about and start acting on. Gold is headed higher over time, and silver moves faster than gold. As I've said before, silver is gold on steroids. We continue to believe that the fundamentals are strong for the metals, and so we are extremely excited about owning gold and silver over time because we think time is on our side. That according to Rick Rule from Sprott USA. Harold, stock market taking a major hit, major concerns there. We saw some good strength in the metals markets this week, and it's been a positive week for metals, not so much for the stock markets.
Very true, Randy. Again, we talk about it every week, and if you're not concerned about the stock market, where a lot of people have their money, you better be, because again, we have a stock market here in the United States that is built on not the economy getting stronger. It's only based on extremely low interest rates, which is manufactured basically. It was meant to happen, and then on top of that, again, you're talking about the quantitative easing that's been put into the market for the last several years that just hasn't worked. Again, they had the right idea. What the government felt was that after 2008, when the markets plummeted from 14,000 down to 6,500, they talk about the 1987 crash, but in all honesty, it was the 2008 crash which the market fell more than 50%. So the thing is, and would have fallen further if they didn't do what they did at that point. So it made sense for the Federal Reserve and the U.S. government to try to get the economy back on track by putting money back into the system, by bailing out the banks and bailing out companies like General Motors and Chrysler and AIG Insurance and all the companies that they bailed out. And basically they did bring the markets back to where there was no panic in the markets anymore. And again, it was obviously giving them a chance to try to rebuild the economy in the United States. And the idea of putting trillions and trillions and trillions of dollars back into the system seemed to make sense. However, what they really wanted to see happening by putting all these trillions of dollars back into the market was people getting back to work. Because obviously after 2008, once the stock markets fell and once the real estate market dried up because of the mortgage situations, when you really look at those two industries, a lot of people are employed in the real estate business and in the stock market. Basically, you've got brokers. You've got in the real estate market, you've got builders. You got building supply companies. You've got real estate brokers. You've got mortgage brokers. You've got all these people that are employed in that industry. And obviously, when the real estate market plummeted in the United States, a lot of people lost their jobs. Back at that particular point, people were making huge money. If you were in the mortgage business, or a real estate broker, you could have been making $300,000, $400,000, $500,000 a year, and then the bottom fell out of the market, and obviously all those jobs are gone. Now, those people that were making $300,000, $400,000, $500,000 a year as brokers, as dealers, as stockbrokers, as real estate brokers, they never made that money back again. They went from making $300,000, $400,000, $500,000 a year and more to finding jobs that were paying $50,000, $60,000. So that's where things really started to get bad. And basically, the government, by putting all this money back into the marketplace, hoping that they'd get people back to work, that's the area where that has failed miserably. Because not only have these people not been able to get back to work, but people that were making big money could never replace the jobs that they had. So that's the situation that we find ourselves in at this particular point. People cannot find good paying jobs. They certainly can't find the jobs that were paying $500,000 a year, like in 2003, 4, 5, and 6 type of thing. So really, everything that the government tried to do has not really worked to their satisfaction. The unemployment rate is still extremely high. Now, where the government is showing a 6.7% unemployment, nobody really believes those numbers, except for Wall Street. They believe anything that is bullish that you tell them about, they're going to expand on, and obviously the market's going to move higher just based on that news alone. However, the news in the United States is not very good. The economy has not recovered, and the stock market, if it wasn't for quantitative easing, would not be sitting at 16,000. It would be sitting at about 7,000 or 8,000. So basically, all they've done is, again, put a tremendous amount of money back into the marketplace, and it hasn't had the desired effect, and now there's other problems creeping up. We've talked about this a lot over the last several years. I still believe the biggest problem moving forward is the derivatives market. And there's a report in the newsletter this week that you've got to read, because the height that this derivatives market has reached is unprecedented. It's in the multi-trillions of dollars. It is so huge, and it's an unregulated business that most companies don't understand how to get out of those derivatives. That could be the one factor, the one major factor that could push the Dow back down to that 6,000 level. So again, we're not bullish on the stock market in any way, shape, or form, because really nothing has changed in order to make us bullish on that market. All that has been done is trillions of dollars have been put back into the market, and it has not had the desired effect. In actual fact, once they stop putting money back into the market, there's no doubt in my mind where the Dow is heading to. So if you have your money sitting in the stock market at this particular point, I'd be very concerned about that. It's not the right place to be, because again, the stock market has moved up, not based on strong economic moves, but by quantitative easing, and that didn't work. So be prepared. On Thursday, the market fell over 260 points, and we're down right now as we're taping the show about 110 points further in the Dow. Now, Is the Dow going to drop, to these levels right away? No. Certain things have got to happen in order for that to happen. These hedge funds have got to start getting bearish and nervous about their positions in the market, and that's what will push the market lower. So as we're taping the show here on Friday, you've got the gold market down about $1. We're trading at 13.1750. Got the silver market basically even on the day. We're trading just above the $20 level. Platinum's up $3 at $14.60. Palladium's up $13 at $8.07. You could see a very strong move coming in platinum and palladium based on shutdowns in Russia, because Russia is the biggest producer of platinum and palladium, and we could see prices in both those metals skyrocket over the next short term. Then you've got the Dow down about 100 points, sitting right at the 16,000 level as we speak. The NASDAQ got hit hard on Thursday. It was down one of the biggest down days I've ever seen for the NASDAQ. It was down 125 points, and now we're down another 10 or 15 points this morning. So the NASDAQ has never, ever recovered. Back in 1999, when the NASDAQ plummeted from 5,000 down to 1,000, it's never, ever gotten back to that 5,000 level. We started getting close. It got up to about 4,300. Now we're back down to the 4,000 level, and again, we're down in 2 days about 135 points on the NASDAQ. You've got the Toronto Stock Exchange down heavy on Thursday, down another 50 points so far today at 14,259. The U.S. dollar has now dropped below the 80-cent level and is back down to 79.45. The important number for the U.S. dollar is 78.50, which is about really just 100 points from where we are today. And there's no doubt in my mind that the U.S. dollar is going to continue to fall, but only fall against certain currencies. It's falling against the euro, and it's falling against the British pound, but it's certainly not falling against the Canadian dollar. However, the Canadian dollar did come back because of the elections earlier in the week. The Canadian dollar was at 88 cents at its low, and now we're trading right now at about the 90 to 91 cent level, so it has come back a bit. I do believe the U.S. dollar will continue to fall. 78.50 is a very important number, and at 78.50, that could push the gold market back up to around the 1,500 level in that area. Then, if we get down below 78.50 on our way to 72.5 cents, which was the low that we saw in 2008, in 2011, that could bring us up to $2,000 in gold, and that would really get things going. So I do believe that we're heading back on the right track. Again, these markets will remain volatile, and we'll have to see what happens over these next few weeks. But all in all, I would really start to lighten up on paper assets, especially if you have a lot of money sitting in stocks. The stock market is not the place to have your money at this time. The Nikkei has been plummeting. It's down 353 points this morning. It was down substantially all week, and we're sitting at 13,946 in the Nikkei. Meanwhile, the market that's on a tear right now is crude oil, which is one of my favorite markets. I do believe that crude oil is going back up to 110 to 120, and if situations continue in Venezuela and in Russia, look for oil prices to go back up to 140 to 150. So at this particular point, we're trading at 104 in crude oil, but we're very bullish on oil, and I do believe that crude is going to not only break the 110 level, but possibly get to as high as 140 to 150 this year, depending on what happens in those two major areas, which is Russia. Russia is one of the biggest producers of oil in the world, and with sanctions against Russia and troops being amassed in the Ukraine border right now, things are going to start to hit there. And again, oil is one of the major factors that will happen as a result of what's happening in Russia. And again, Russia is one of the biggest producers of crude. I do believe crude's going higher based on what's happening in Russia. On top of that, Venezuela, they've got nothing but problems there. Inflation like you've never seen before. $100 loaf of bread, $300 for a pound of chopped meat. And again, nothing is getting better there. And Venezuela is one of the biggest producers of oil in the world and supplies China with a lot of their oil. So all in all, things are not looking rosy in the market right now. Again, we saw a couple days this week where the stock market market got hit really heavily. The Nikkei is plummeting as we speak. The TSX got hit big this week. Again, we really need to sit back and take a look at how we're investing our money because, again, if you're in your 50s, 60s, 70s, and your money is sitting in stocks right now, and this market falls heavily like we believe it's going to, you can never replace that money again. Be smart about it at this point. Lighten up on those risky assets and get something into the type of asset that will hedge you against extremely high inflation and currency problems, which are definitely happening, and there is no doubt in my mind that we're heading for a major fall, not only in the U.S. stock market, but other stock markets all around the world, Randy. That's what's happening so far this week. Again, I think that the metals are starting to build a base, but I don't like the stock market at this point. And again, I would not have a lot of money sitting in that market right now.
Harold recommends Worldwide Precious Metals. They are a bullion dealer. They're the experts to deal with when it comes to investing in gold and silver. They're going to be in Calgary the first week of May, conducting free information sessions about investing in the ultimate hard asset, gold, silver, platinum, palladium, precious metals, the physical market. If you would like to speak with them, and please remember that these slots will go very, very quickly. Connect with them at wwpmc.com. Their website is wwpmc.com. The telephone number 1-866-623-2002. They're going to be in Calgary the first week of May, conducting free information sessions about investing in hard assets, precious metals. And when you're looking to invest in precious metals, speak with Worldwide Precious Metals, a Western Canadian-based company out of Vancouver, the only Canadian precious metals bullion dealer recommended by Harold Siegel for over 10 years. They're the experts to trust when investing within this very specialized market. Find them online, wwpmc.com, or call free of charge 1-866-623-2002. It's easy to start your own precious metals investment account. You get an experienced, results-driven, personal bullion dealer who's there to help you maximize profit and minimize risk by building an understanding and relationship directly with you. All investments are secure and 100% insured to the full value of your investment. The metal can be stored in your behalf all outside the banking system or be securely delivered to your door. Discover Worldwide Precious Metals, domestic or foreign storage, in addition to premium storage options in specific coin and bar form. With Worldwide Precious Metals, you will always have instant liquidity in and out of the market with just a phone call and have access to your account online 24/7. Worldwide Precious Metals has worldwide access to the physical bullion you want today, and all gold is allocated either wholesale or premium. Call and find out more. 1-866-623-2002. That's 1-866-623-2002. Or visit them online at wwpmc.com and book an appointment for Calgary when they're going to be there the first week of May. We have in our newsletter this week an amazing chart from King World News. This is a must-read. Get it from Worldwide. Shocking charts show silver set for a staggering $70 surge. Since the high in 2011, silver has gone through a major correction. Silver is roughly 60% off its 2011 high. This may sound extreme, but for silver, this decline is just a normal move in its bull market. The first big decline was from $840 to $540 back in 2004, and Harold and I remember that move well. We were doing the show back then. That represents about a 35% pullback. The next major pullback took place in 2008, when silver came back from $21 to $840. This, like the recent decline, represented a 60% pullback in price. The main thing for investors to understand is that these pullbacks represent excellent buying opportunities. Those who bought the first decline in 2004 saw the price rise a massive 288%. And those who bought the decline in 2008 saw the price advance a staggering 495%. Assuming this bull market is not over, the next move in silver should total somewhere between 288 to 495%. If we split it down the middle, the next gain from the current level could be roughly 390%. So if 1810 was in fact the bottom for silver, that would translate into an astonishing price of $88.69. You heard right, $88.69. The $100 price target below represents an advance of roughly 450%. A remarkable move in the price of silver to 100 would look like this, and you can see the charts in our free weekly newsletter. Get them from Worldwide Precious Metals. They'll be happy to send them out to you. www.pmc.com, 1-866-623-2002. Find out about how silver could surge $70. Get the charts, look it over, let Worldwide explain it to you. There is a major move potentially coming in silver. And if you look at the gold to silver ratio, right now the gold to silver ratio is approximately 66 to 1. And if you had a price of $2,000 gold, the silver price would be $33.33. And that's 60 to 1. 50 to 1, $2,000, the silver price would be $40. 40 to 1, 2,000, the silver price would be 50, 30 to 1, 66, 67, 20 to 1, $100, and 15 to 1 with gold at 2,000, the price would be 133.33. And it's not too far-fetched to believe that we could hit $2,000 gold. I know that there are a lot of different prognosticators, experts in the precious metals field calling for it by the end of this year, possibly next year as well. And if you take a look at these charts, it is very possible to see that we have the potential of silver hitting $88.69 or $100. But Harold, we really encourage, and we have about a minute left here, we really encourage everyone to get these silver charts and make an educated decision. Speak with Worldwide about having an allocation of silver in your portfolio today.
You bet. Again, silver is a very, very volatile metal with gigantic swings, as history will prove. And then the other chart you should definitely look at is the chart on silver going back from 1979 and 80 and see how that market responded when it really did take off. And I believe we're in a similar type of market where the market went up $35 in just a very short period of time. So definitely take a look at those charts. It's going to help you make a decision as to where you want to put your money. I very strongly recommend you have some money in hard assets at this point, because what's facing us and what's coming up soon is a lot of volatility in the paper markets, and they can crumble just like they did in 2008.
Ron Paul, of course, a former U.S. congressman and advocate for hard money, gold backing up fiat currency, said this week, the chaos that one day will ensue from our 35-year experiment with worldwide fiat money will require a return to money of real value. We will know that day is approaching when oil-producing countries demand gold or its equivalent for their oil rather than dollars or euros. The sooner, the better, according to Ron Paul. And we're starting to see people really believe that the Far East, the Middle East, starting to position themselves for the U.S. dollar no longer being the dominant currency. And they're trying to take advantage of that situation right now by positioning themselves by adding gold to their portfolios as countries. Speak with Worldwide Precious Metals. They're going to be in Calgary the first week of May, and they'd love to speak with you. Connect with them at www.pmc.com. The telephone number 1-866-623-2002. Going to come back and talk about diamonds as the World Financial Report on radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on April 11, 2014. Our time is 9:12 Mountain. Radio show runs on your favorite radio stations. Also, the shows are streaming. They're archived at hesradio.com, rarecoloreddiamonds.com. You can listen to them anytime that you want. We have a podcast through iTunes. The radio show is portable. You can have iTunes on your portable device. Subscribe to our podcast. The shows come in. Listen to them at your convenience. Harold does daily market commentary. You can find that market commentary. A lot of people listen to it on a daily basis. It's only about 2.5 minutes long. And you can listen to it daily at hesradio.com, rarecoloreddiamonds.com. It's also a part of the podcast as well. When it comes to investing in gold and silver, there's only one company Harold recommends you use. That's Worldwide Precious Metals. Their website is www.pmc.com. Their telephone number 1-866-623-2002. And they're going to be in Calgary the first week of May conducting free information sessions. And those spots will go very, very quickly. We find that all the time. They'll be obviously educating you about investing in gold, silver, platinum, palladium. If you'd like to find out more, speak with Worldwide, www.pmc.com, 1-866-623-2002, and get that chart from them about the potential rise in silver of $70. Find out more about the potential of the silver market. Harold's website for diamonds is rarecoloreddiamonds.com. Back in August of 2005, Harold wrote an article about rare-colored diamonds and really has been a leader in the investment diamond industry since that point in time. His website, the top website on the internet for colored diamonds, rarecoloreddiamonds.com. You can speak with him personally and privately anytime. He'll be happy to speak with you. 1-800-432-1022, 1-800-432-1022. And his auction website is hsfineauctions.com. I guess it was about 3-4 weeks ago we had another outstanding auction, and Harold will be announcing another auction coming up very soon. Listen to our radio show. We will definitely be letting you know that we have one coming up in approximately a month or so. One of the highlights of our show always is the featured diamond, and we had a stunning featured diamond last week. And yes, that featured diamond did sell to an investor. That person has added it to their portfolio. No surprise. It was an amazing diamond. This week's diamond is a 1.51 carat radiant cut, fancy, vivid, yellow, internally flawless. Go to rarecoloreddiamonds.com, featured diamond of the week, and take a look at the video that accompanies it. It is absolutely stunning. Another beautiful diamond. And we'll talk about some of the other highlights of the week in a moment here. We'll get Harold to give us his commentary for the week in diamonds. But Sotheby's had a magnificent jewels and jadeite sale April the 7th in Hong Kong. And Harold, the auction results there were very, very impressive. We were very happy with them.
Oh, you better believe it. And what sold at phenomenal prices were the diamonds that we recommend and we also sell at our auction, which are pink diamonds. They did tremendously well, and yellow diamonds cleaned up. So, again, those are the diamonds we've been recommending for the last 10 years, and those are the diamonds that did the best at auction. So I'm very, very pleased with that, obviously. The featured diamond last week was spectacular. Anytime you can get a vivid diamond, vivid is the best color that the Gemological Institute of America will grant, and, again, they are phenomenal. So last week's diamond, a princess cut, vivid orange yellow, was just outstanding, and some lucky client did get that diamond. But on top of that, this week's featured diamond is brand new. It's spectacular. It's almost impossible to get vivid yellow flawless diamonds today. The part of the mantle where these diamonds came from is basically empty, and we have very, very few of them. In fact, it's the hottest selling diamonds that we have right now are the vivid yellow flawless diamonds and the Argyle pink diamonds, and those are for very strong reasons. So go on rarecoloreddiamonds.com, look at the featured diamond. It'll take your breath away. And those are the diamonds, again, that go up the most, because anytime you buy the very best, they always go up more than anything else. And these vivid yellow flawless diamonds are just absolutely stunning, and the featured diamond is no different. It's spectacular. We are definitely going to run out of the vivid yellow flawlesses very, very soon, and it's going to be very difficult to replace them, meaning that if you're one of the lucky few that owns a vivid yellow flawless diamond, you're in store for a huge payday down the road, because, again, there's very, very few of these left. And some of them, like, for example, the large one that I have, the 6.5 carat emerald cut, it's actually an Asher cut, a square emerald cut, vivid yellow flawless, those diamonds are now selling at $250,000 a carat. that's how much those diamonds are going up. So again, I'm just very, very pleased with what's happening in the diamond business. You need to buy quality because, again, quality is always going to get you the returns that you're looking for, and you don't have to invest multi-millions of dollars to make a lot of money in the rare diamond business. In fact, it's the lesser priced diamonds that are going up more than any other diamonds are. So the diamonds that are in the 20, 100,000 range, $250,000 range, percentage-wise are going up tremendously, and it's the diamonds that are in the $5 million range that also go up heavy, but not as much as these smaller diamonds. You see, we've made the market for these diamonds. It never existed before. You know, people that invested in smaller diamonds never had a way to resell these diamonds, and that's our biggest contribution to the diamond business, is that we built a secondary market to resell these diamonds. It's called H. Siegel Fine Auctions. It's the company I'm very, very proud of, and again, it's really becoming a big deal. A lot of people around the world are starting to take notice of our auction business, and that's our business that I believe will grow to the greatest extent. So we're very, very excited about what's happening in diamonds, but we're tremendously happy what's happening with our auction business. H. Siegel Fine Auctions is going to have another auction going into just before the summer, so in May, and we'll announce it next week. What the actual date is, but more than likely it'll be the first or second week of May that we'll hold this auction. We may have one small one in June, and that will be it again till October, because basically with so many people on vacation and a lot of our clients in Europe where they take month and 2 month long vacations, it makes no sense to hold auctions during the summertime. So again, we have probably 2 more auctions coming up in May and June, and that'll give you an opportunity to get involved, to get into the diamond market at really great prices and see how our business works. Again, not only do we bring you amazing high-quality investment diamonds, but we also will resell those diamonds for you through our auction business, H. Siegel Fine Auctions. The diamond market is on fire. The worse the economy gets, the more and more this market is in the limelight. And after an auction like we had this week, you're going to understand why. Because, again, when you see what the estimated values are of some of these diamonds and what they actually sold for, you'll understand the investment quality of these diamonds and the potential moving forward. There's just no doubt in my mind that these are the best assets to own at a time when currencies are falling, when stock markets are in trouble, where the derivatives market could totally ruin the paper asset market, where you've got all these risks out there. It's nice to be able to invest in a investment like a diamond and be able to sleep at night knowing that you're not going to wake up in the morning and find out that your investments have plummeted. In fact, in these investments of rare diamonds, they never decline in value because there's so few of them. And again, getting back to the yellow, vivid, flawless diamonds, there's very few of those available. In fact, you're going to find that once we sell off the diamonds that are on our site, it's going to be nearly impossible to get a vivid yellow flawless diamond, just like it's going to be nearly impossible to get a vivid pink argyle. Those are also the best colored pinks you can get. They go up more than almost any other diamond. The mine is going to close in less than 6 years, and if you're fortunate to own an argyle pink diamond, especially a vivid, you can see 10 times return on your money. And again, those type of returns are just not available in any other market that you're not taking a huge risk on. So all we're basically doing is recommending that you invest in diamonds that are a safe investment, that never decline in value, that are rising because of supply and demand. Demand is extremely high and supplies are very low, and soon you will not be able to get a pink diamond. Don't wait until the mine closes down and pay the extremely high prices. Invest in them now while the prices are still very reasonable. And again, the closer we get to the mine closing down, you could see a $50,000 pink turn into a $500,000 pink just because of what's happening with argyle. So again, Randy, we've never been more excited. We've got a lot of educational situations coming up. We've got auctions coming up that we'll announce on next week's show, and we will post on our site. But all in all, again, the diamond market is on fire, and it's definitely where you should have some of your money. My strongest recommendation is get out of the stocks. Again, the market is extremely volatile. There's not a lot of good moves in news in the market right now. And again, you're going to find that yellow flawless diamonds move up anywhere from 15 to 25% a year, and so do Argyle pinks. In fact, the vivid pinks are moving up by 50% a year. And those, again, are returns that are real returns. So, again, Randy, we're ecstatic about what's going on in the diamond business. Why don't you give us an indication as to what happened with the Sotheby's auction this week?
I do want to do that, but first I wanted to touch on one thing, and that is our featured diamond is a 1.51 carat radiant cut, fancy vivid yellow internally flawless. And if you're interested in investing and adding this to your diamond portfolio, speak with Harold at 1-800-432-1022, rarecolorediamonds.com, the website. And it's interesting to note, Sotheby's Geneva is going to be auctioning off, and this is May the 13th, one of the most impressive yellow diamonds in the history of the world. It's the Graf Vivid Yellow, a sensational daffodil yellow diamond weighing 100.09 carats and mounted as a ring. And they say this is one of the largest fancy vivid yellow diamonds in the world. The diamond is on a pre-estimate here now, pre-sale estimate of $15 million to $25 million. So we will keep you up to date on that. But you can see the excitement in the yellow diamond market. And speak with Harold personally and privately at 1-800-432-1022 or go to rarecolorediamonds.com and connect with him there about investing in yellow diamonds, because I would imagine that this Graf Vivid Yellow will go for a record price, and it will set the bar higher on the yellow diamonds that are currently in the marketplace. So now is the time to position yourself prior to this auction. But as promised, we had an auction this week, Sotheby's Magnificent Jewels and Jadeite Sale, April the 7th, 2014 in Hong Kong. And lot 1740 was a light pink diamond and diamond ring. And the estimate on it was $554,000. It went for $871,567. We also had lot 1834, a fancy light pink brown diamond and diamond ring. The estimate on it was $283,000. It went for $593,000. You know, the low end on that was $232. The high end was $283. Went for $593,078. Lot 1901, a fancy light purplish pink diamond and diamond ring. The estimate on it was $283,646. Went for $391,948. And then we get into the yellow diamonds. Lot 1900, fancy yellow diamond and diamond ring. And the estimate on it was $232,074, and it went for $376,476 US. Also a pair of fancy yellow diamond and diamond earrings. The estimate on it was $232,074, and it went for $283,646. Also, lot 1863, a fancy yellow diamond and diamond ring. The estimate on that was $103,144. It went for $246,175. Also, lot 1860, another fancy intense yellow diamond and diamond ring. The estimate on it, $128,930. It went for $252,703. And it was interesting, this next lot, this is lot 1755, a light pink diamond and diamond ring. The estimate on it was $90,251. It sold for $221,760. Well over what the estimate was. Also, 1690, the lot light pink diamond and diamond ring, $128,930. It went for $190,817 at auction. And getting back to more yellow diamonds, lot 1902, fancy deep yellow diamond and diamond ring. And they said the estimate on this was $141,000. It went for $159,874. One lot here, 1765, a pair of fancy intense yellow diamond and diamond ear clips. $103,144, went for $159,847 as well. And a lot 1866, fancy intense yellow diamond and diamond ring from Graf. The estimate on it, $90,000, went for $128,930. And it was interesting to note, lot 1833, 3 yellow diamond and diamond bangles from Graf. The estimate on it, $45,000. It went for $104,756. And we get down to just a couple of more items here, but it gives you an idea of exactly what's happening in this marketplace. We have 1729, a fancy vivid yellow diamond and diamond ring, $83,805. It went for $104,756. And there is a fancy yellow intense diamond and diamond pendant necklace, lot 1727. The estimate on it, $51,557. It went for $72,524. Harold, we have these auction results, and you can go from auction result to auction result, and you're seeing these diamonds, the estimates, very reasonable estimates, obviously done by professionals, and the prices going substantially higher than the estimates at auction. And that is not a surprise to us. And as I said off the top here, Harold, when they do sell that yellow diamond, Graf does at the Geneva auction, that will set the bar higher for all yellow diamonds. So if a person is looking to invest in a yellow diamond, do it today, because the prices will be going up. When you have an auction, it sets the bar higher, and it continues.
You bet, Randy. Thank you very much. Those were excellent results. And, you know, the thing is that most of the pinks that sold for those extremely high numbers were not the most highly saturated colors. In fact, most of them were fancy light pinks, fancy light purplish pinks. The one that shocked me was 1834, the fancy light pink brown, because normally brown is not a desirable color, but it is a pretty ring, and it sold for a huge amount, way over what they estimated it would sell for. In fact, some of these diamonds sold for 200 to 300% more than what they were estimating at Sotheby's. And again, in no way, shape, or form is this a reflection on the people that work at Sotheby's, the analysts that determine what these rings are worth or what these diamonds are worth. They certainly know their business. It's just the time. People want to own hard assets, and they want something beautiful, and they want something that's not going to decline in value. And that's what's happening in the diamond market. So even these fancy light pinks and these fancy light purplish pinks, they sold for fortunes. And they're only going to go higher primarily because there's not going to be any more pink diamonds. Then you get into these yellow diamonds. A lot of these yellows are spectacular, but they are selling for gigantic prices because, again, the investment warrants it. And this is only a representation of what's going to continue to happen in the yellow diamond market. Now, all of our yellow diamonds are flawless diamonds. None of these diamonds were flawless, and they went up tremendously. You can imagine what a vivid yellow flawless diamond is going to be worth in 10 years when there's no more of those left. And we're featuring one as our featured diamond. So, again, you're looking at these yellow diamonds are skyrocketing in price, and they should, because you're talking about an asset that, number one, never declines in value. So when you're talking about a time like we're in right now, where it's so difficult to invest money and make money, most people are thinking about just capital preservation, just being able to hold on to their money and not losing it in stocks and things like that. But in a diamond, you don't have to worry about preservation because these diamonds never fall in value. We can also get strong appreciation in this market because it's a hard asset. It's not traded on exchanges like commodities and gold and stocks are. And again, you're talking about something that is beautiful. Our pieces are museum quality pieces, and all of our yellow diamonds are flawless, which means they have a track record. Our yellow flawless diamonds go up by 15% a year. If you were only to invest $20,000 in a yellow flawless diamond, in 10 years that diamond's going to be worth $75,000. You tell me any other investment in today's age that will give you that type of return with the safety that you have in the diamond market, and then put it into a ring or necklace or earrings for your wife, and let's her enjoy something, then give it back to us and let us sell it for you. We'll sell it on our international auction business that we're the only company in the world has. And again, you're going to see returns in these markets like you've not seen in any other investments before. So again, Randy, I couldn't be more pleased. This was an excellent auction, and it certainly shows to our clients that we know what we're talking about, because these assets do nothing but go up in value. I'm extremely pleased with what's happening in the diamond business.
And we can give people a few more here just to whet the appetite. Lot 1890, yellow diamond and diamond necklace. They wanted $58,019. It went for $88,640. That's $88,640. Lot 1895, very interesting. Fancy yellow, green diamond and diamond ring. They wanted the estimate on it $48,994. It went for $80,582. And the fancy intense yellow diamond and diamond pendant necklace, $51,572. It went for $72,524. 1890, a pink diamond and diamond necklace and a pair of matching pendant earrings from Graf. They wanted $30,944. It went for $64,465. Also, lot 1728, a pair of multicolored diamond and diamond pendant earrings. The estimate on it, $38,679, went for $61,242. So you can get these auction results from Harold. We'll be happy to send them out to you free of charge. You can take a look at them yourselves and make a judgment as to where you want to allocate your capital. Do you want some of it in hard assets like diamonds, which we're recommending? Take a look at these auction results and you can see that there definitely is money to be made. Sotheby's Magnificent Jewels and Jadeite Sale, April the 7th, 2014. We'll be happy to send out the auction results to you. And as I mentioned earlier, our featured diamond this week, and this is a stunning diamond, a 1.51 carat radiant cut, fancy, vivid, yellow, internally flawless. And as Harold has said to me privately, it's getting almost impossible to get yellow, flawless, internally flawless, obviously yellow diamonds, because they are so rare. If you're interested in adding this to your portfolio or starting a diamond portfolio, there's only one person to speak with, Harold Siegel of rarecoloreddiamonds.com. And his telephone number, 1-800-432-1022, 1-800-432-1022. And we will keep you up to date when Sotheby's have that Geneva auction. And they're auctioning off that Graf Vivid Yellow, 100.09 carats, mounted as a ring. They think it could go anywhere from 15 to 25 million. Harold, it would not surprise me at all to see a diamond like that go for 30 or maybe even 40 million, because it is a one-of-a-kind and it is absolutely spectacular.
It certainly is, Randy. I mean, just to think that something like that exists is just so exciting. And again, you know, he's the king of diamonds, in my opinion. There's no doubt that, you know, Lawrence Graf has built himself up from nothing to a multi-billionaire in the diamond business. In fact, you know, most people that are into diamonds find tremendous success and wealth. So that's all we want for our clients, is to do extremely well, and that's why we bring these type of investments to you. Again, when you hold on to an asset like a diamond, it can do tremendous things. I bought a diamond back in 2003, a 2-carat vivid purplish pink argyle tender diamond. At that point, it was a lot of money. It was $350,000. That diamond's worth close to $4 million today. Go ahead and try to find a 2-carat vivid argyle tender diamond today. They just really don't exist unless it's in private collections like my own. You know, you're talking, I mentioned before, my wife's girlfriend, whose grandmother 50 years ago bought a 5-carat pink for $50,000. Today, that diamond's worth $5 million. So that's what happens in the diamond business when you buy high quality, put them away. You may not need the money yourself. Maybe you want to hand this down to your kids or grandkids. That's what I do also with my family. I've got diamonds put away for my grandchildren, and when my kids were growing up, they had diamonds put away for their future. So it's that type of investment. It's safe. They go up tremendously, but they're really beautiful. And again, anybody owning one of these assets has always said the same thing. They're just absolutely in love with their diamonds. And again, enjoy them, make money with them, then give them back to us to sell, and we'll sell them on our auction business for you. We'll show you what this business is all about.
This week's diamond, the featured diamond, a 1.51 carat radiant cut, fancy vivid yellow, internally flawless. Speak with Harold about that diamond, rarecoloreddiamonds.com, the telephone number 1-800-432-1022. Thank you very much, Harold Siegel, for your knowledge and another great show.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
Don't forget the company Harold recommends you use when it comes to investing in gold and silver. Worldwide Precious Metals going to be in Calgary the first week of May, conducting free information sessions about investing in hard assets, gold and silver, the physical market. These slots will go very quickly. They always do. If you'd like to book a time to sit down with Worldwide Precious Metals when they're in Calgary, speak with them at wwpmc.com or 1-866-623-2002. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.